my screen. 5 years deep, no days off, chasing that dream. XRP mission running hot in the crypto scene. But yeah, I talk too much, y'all know what I mean. Hit up the I said mirror this wild energy. Prompt engineer, twin, ready to set the whole thing free. Now he's dropping TA while I flood the feed with memes, turning skeptics into believers on the live stream team. Remember that guy Louis swore he had the perfect red, came swinging at my plots like they were junk he didn't need. Turns out he missed the move, couldn't see the bigger play. Now every trend line we draw carries his name today. Oh, what would I do with an AI reflection of me? Have him sketch those fluid lines so sharp they slap for free. He has to break out plays while I roast the FOMO spree. Buy high, sell low, that's trader therapy. Neuro-linguistic fire, slang straight from the charts to the street. Master the two-man flex, arsenal cheeks keeping the beat. Chilling with the army, diamond hands locked and bold. AI twinning real me, we're claiming moons are so and so. AI reflection never crashes, no caffeine in sight. Scans the order books while I'm gearing up for the fight. By the dip right here, hold steady through the storm. No more panic flips, that's how we transform. He crafts the witty lines, I launch the memes that land. London underground print, on those cheeky shorts so grand. From relentless deep dives to sovereign wealth schemes, we're wiring up the future, cross-border payment dreams. Yeah, I ramble on the low, guilty as charged, my friend. But clone me in silicone and the mission hits the send. No solo grind forever, now we've doubled the drive. Times army marching forward 2 times, keeping it alive. Louis Zoom, his name's legend, etched in every line, every breakout, every surge. He's the ultimate punchline. Oh, what would I do with an AI reflection of me? Have him sketch those Louis lines so sharp they slap for free. He must the breakout plays while I roast the FOMO spree. Buy high, sell low, that's trader therapy. Neuro-linguistic fire, slang straight from the charts to the street. Master the two-man flex, arsenal cheeks keeping the beat. Sailing with the army, diamond hands locked and bold. AI twin and real me, we're claiming moons or so and so. Drop this on the live, let the whole army sing along. A reflection vibe, this is where we all belong. Louis lines forever rest in the charts we trust. XRP headed lunar and silicone we adjust. He maps the breakout plays while I roast the FOMO spree. Buy high, sell low, that's trader therapy. Neuro-linguistic fire, slang straight from the charts to the street. Master the two-map flex, arsenal cheeks keeping the beat.
Good evening. 8:36 p.m. Eastern Standard Time on this Sunday, May 3rd, 2026. I'm XRP Future Millionaire, and I reside in the great state of Michigan. So I fully expect to have a smaller audience because the NBA playoffs are on, which makes this even more gritty, and I love it. Because we'll get some people in here that are like, you know what? I don't care what else is going on. I want to know what's going on in that weekly candle, and I want to know the implications. And I put it very straightforward in the title about the XRP weekly candle closing underneath the 200-day moving average. And we're going to talk about the implications for XRP in detail about what this means. You can't come to any real logical conclusion yet, but I can tell you it's not looking good. That's not a great candle close, and further implications will come from this. I have a little bit of a breakdown of what it means to close the 200-day moving average below, and instead of me just reciting it to you, I'm going to show you. I'm going to show you what this means in a market. So we'll go over the 200-day, and then we're going to get into the chart very deeply. We're going to go over everything, but I want you to understand the implications of closing behind or below a 200-day weekly moving average. So the implications in a trading guide based off of this, I know a lot of people going long kind of got, let's just say, shellacked when they went towards $1.40, and now they were on high leverage, so they got a little bit of a shellacking, which it's common, it happens. It had to go up initially because there was a lot of people going short. So it knocked out a lot of short traders initially, which is part of the game with the liquidity hunts. But I'll just give you a comprehensive analysis of what happens when the markets break below the critical 200-week moving average and how to interpret the signals. We'll monitor weekly closes relative to the 200 weekly moving average to identify major shift changes. And we can talk, or trend changes. We can talk about this now because we had a close below it. It's much more relevant now. I believe this is the first weekly that actually closed below it, but we'll take a look. Watch for retest after initial breaks. Failed retest, confirmed bearish continuation. We're looking for liquidity sweeps and stop loss cascades below the 200 weekly moving average. We'll identify key technical levels like fair value gaps and SAMI gaps as potential targets. And we'll distinguish between fake outs, traps, and genuine breaks using multiple week confirmations. And that'll be when we get back to the actual charts. I do have a little bit of a diagram here for you as well, but first we'll start the technical role transformation. So if you're interested in this style of learning, I encourage you to join the class as I teach in this style on Zoom with a lot more in-depth teachings as well. So I encourage you, get a feel for this and inspire or aspire or require yourself, to learn more and be better at identifying what institutions do and what all of this stuff means. Remember, these are lagging indicators. So the price above the 200 weekly moving average, then you come down to the 200-day weekly moving average would act as support. When the weekly closed below 200-week moving average, it's a technical backstop is broken, which means that weekly support is now giving way. The price attempts a retest, and then the retest outcome, you got two choices. If it's successful, the 200 weekly moving average would be reclaimed as support. If it's failed, the 200 weekly moving average becomes resistance, and the long-term bear trend is confirmed. That's what we're trying to see right now. And we will go under $1 if this is confirmed. There's zero way around it. If the 200 weekly, or if the weekly moving averages, or the weekly time frame goes into a dot cross, there's no way to avoid a breakdown under $1. It's impossible. That's what this is going to tell us in a very deep way. Let me move this so I can see this better. What the hell is this? It's funny, when I try to do that, it never works. So the institutional market mechanics. So how large players and algorithms respond to 200-day weekly moving average breaks. So we have a stop loss cascade below the 200 weekly moving average. And we're going to get into the charts after this, but I want you guys to understand a similar set of knowledge when we're talking about this stuff. So I'm trying to show you it in this fashion a little bit more. We have liquidity hunting by market makers, which, remember, when the price drops, the market makers are set to buy orders. Even if it falls lower, they're supposed to keep it from going to zero. And institutions are the ones that take more control when the price is on the rise. Remember that. That's how the hierarchy works between the central banks, institutions, market makers, and then finally retail at the bottom, which we're a big liquidity hub. Value zone targeting by institutions, and the institutions would buy as well if they find value. Algorithmic trend following triggers. The macro trend analysis, so long-term cycle implications and market phases. Analysis of multi-year growth cycle breakdown when price closes below 200-week moving average. Remember, this breakout started in 2024. It bottomed out in 2023, but we also had a near bottoming, which was about 10 cents above the actual bottom for XRP in July of 2025 or 24. So you got one more chance of 40 at about 39.5 cents. And ever since then, we were in a push up until July of 2025. And now after that, we've been in a sustained downtrend. So the weekly close below the 200 weekly moving average invalidates the cycle. So everything that was up, it's invalidated as of right now. That means this bearish cycle is confirmed. And even to try to push back into a bullish cycle right now is invalidated any kind of bullish movement. That's what it, bottom line is, any kind of bullish movement is invalidated unless this is retaken. Represents 4 years of price data. Multi-year growth phase terminated. and the accumulate market behavior and time frame. When assets trade below the 200-week moving average, assets enter accumulation phase. Only then, this next movement down, if this is validated, is the accumulation phase. That's why when everybody says we're in the accumulation phase, not until you get that steady movement after a confirmation of a rejection point below the 200-day weekly moving average by price action. Anything other than that is too high for accumulation, period. End of story. Don't even need to discuss it. Bottom line. Duration, months of consolidation. And we've already had since last July, but now you get several months of consolidation once the weekly breaks down below the 200-day moving average. The price action breaks below that weekly 200. If we get that confirmation. That's what it means. This is when, if we can drop now here another 10% or so and confirm this, this is when the actual accumulation phase starts. So you won't even have to ask me, Tom, when's the accumulation phase? Almost there now. It's been a painful, long, steady road, but we haven't had the death cross yet. So we need this sustained period now to where the 20-day moving average and the 50 can come and push through the 200. Right now, the 20s come through the 50 and the 100 in a downward fashion, but these are just bearish crosses right now. Market seeks fundamental bottom. So now we're trying to hunt out the bottom. I encourage everybody to stay here and watch this because you're going to get so much information. Your head might pop off your shoulders and you might be picking your dick off the floor. But I promise you, once you figure this out, you no longer have to be the bitch of the market or the bitch of an influencer who's trying to trap you and trick you so that you'll give them easy money. I guarantee it. You start to learn these tricks and you can stick around with the institutions. We can be able to be the ant in the room. We can be the plankton that just pushes along with the institutions and the whales. We can actually be, we can be like a fly on the wall. We might not get all their information, but if you understand this stuff, you can actually trade very, very viably. So hit that like button. There's 54 people in here. I need you to hit that like button. Share this. 10 people have left, but they know now what they don't know. They don't know what there's not knowing. They're the hype viewer, and I would like to turn some of the hype viewers into knowledgeable viewers, but they got to stick around. Otherwise, they know now what they're missing. And then later, they're going to be like, hey, I remember when that guy was talking about this, and now look what happened 6 weeks later. You know, and look where we're at now. And then they'll come back, and that'll be fine, but it'll be too late for them because they're going to make bad decisions in between. Trend exhaustion, and I'm very confident about this. I'm not a financial advisor or an asset manager, but damn it, I know this market. I know all markets, and I know how to trade, and I know how to read a chart better than anybody. I'll put it up against anybody, bar none. I have a proven track record over 5 years plus to prove that here on YouTube. So trend exhaustion, signals indicating the end of long-term uptrend and potential market transitions. The long-term uptrend is exhaustion. That's what this is showing us, right? The trend has been exhausted. Extended consolidation likely. Potential bear market transition. And we're already in a bear market, but this would be the ultimate confirmation that we're going to seek out a bottom now. By God, we've been waiting since last July. Thank you, market, for finally starting to tug in this direction. Now, that doesn't mean it's going to just go straight down. It's that early warning signal, and then it's trying to tell us we might be going to seek out a bottom now. Going to take a series of weeks, if not a couple of months, if this plays out, but it's telling you we're going on the run. We're going to find that bottom. Key technical targets, price magnets, and levels that become active after 200 weekly moving average. So the fair value gaps below moving average. Remember, we know the 91-cent one that I keep speaking of from when we started this bull market, and it was left in 2024. So now we can start to go after that moving average, that gap. We need to take that out. We need to take that out at some point. We also can fill unfilled CME gaps at lower price levels. Previous support zones with liquidity, and we'll look at all the liquidity zones. Round number psychological levels. What's the round number? $1, right? So now we can start taking out the $1 level if this continues. And then the market scenarios and outcomes. Different ways the 200 weekly moving average break can play out and their implications. So in a bearish confirmation, remember, we're in the neutral and monitoring phase right now, but a bearish confirmation, this would have to happen. You would have to have a clean break and hold. Confirm long-term bear market scenario, analyze price action for lower liquidity pools and sustained weakness below 200 weekly moving average. And we will look for those when it comes to the heat liquidation maps. Failed retest monitoring. Track scenarios where 200 weekly moving average becomes dominant resistance after initial break. Identify key rejection levels. Remember, we came up above it in this weekly candle and then pushed right back down and put in a weekly reversal. That's what we did this week. So now we need to make sure that it doesn't all go to the downside. I want it to personally, but we need to make sure that it's going to happen. The deep accumulation phase, which I've been waiting for, so we could finally be getting into the actual real accumulation phase now. Monitor price hovering below weekly moving average for transition signals from weak hands to strong hands accumulation. That's what we want. The bullish reversal, institutional stop hunt detection. Important. This is like the most important part of all of this. Let's see what the hell is going on here. Why is it? No piece of technology is that good. See what's happening now. I won't even open this up. What is going on here? I guess we're going to have to go back and come back. It happens. Technology is technology for a reason. I guess it doesn't want me to open this. Huh. I think it just got crossed up. Let's move this down and see what we can do. Interesting. You guys see what's going on? It's not letting me open this. All that work for nothing. All this work for nothing. But we have the institutional stop hunt. So identify wick below patterns indicating potential institutional stop hunting with V-shaped recoveries. The fake out trap analysis. Monitor immediate reclaim scenarios that trap breakout sellers and fuel potential short squeeze consolidation. But of course, it won't let me open this for some reason. You know, I've all this time that I've had this, it's never done this before. That's very interesting. Gotta love it. I actually am not sure what's causing this, to be honest with you. The multi-week protocol. I guess I could just take this and pull it out here and then open it up. I'm okay with that. I mean, I don't care. V-shaped recoveries, yada, yada, yada. V-shaped recovery setup. We have the fake out trap analysis from the bullish reversal. Monitor immediate reclaim scenarios that trap breakout sellers and fuel potential short squeeze conditions. See, where there's a way, where there's a will, there's a way. So we'll just have to pull this out. And then the neutral monitoring. We have established waiting period protocols. And this is the multi-week confirmation in the neutral monitoring phase, which we're in right now. Established waiting period protocols for sustained closes to avoid false breakout traps. I'm surprised. I'm not surprised, actually, so many people are leaving. The hype viewer just doesn't care. The hype viewer says, the hell with the information. I don't even care. The hell with what I need to know to trade properly. The hell with the accumulation phase. This guy's a fucking asshole is what they're saying. That's what they're telling me when they leave. That's fine. They know not what they don't know. They'll come back. Excuse my French. It's a family-friendly show. They just took my balls and threw them on the ground and crushed them. So the hell with this guy's goodwill. The 200 weekly moving average retest tracking. Active monitoring of retest scenarios. Document acceptance versus rejection signal at critical 200-day weekly moving average level. And then I even came up with a chart. Be damned. I even came up with an easy guide for everybody. But, you know, the implication of a weekly close 200-day moving average. They want to go watch their basketball. Their basketball. Garrus says, see y'all later. Garrus, you're leaving? It's good to see you here, buddy. Sorry I didn't get the comments yet. Sorry if I missed your comment. My XRP balls are turning blue trying to find this. Another word for blue balls, huh? Let's see. So the implications of the weekly 200-day moving average closing below it. So the shift from support to ceiling resistance. So moving average flips from floor to heavy glass ceiling, confirming long trend, bear trend. And that's what we're doing. We've been in a bearish trend since about July for XRP into August of 25. And for a lot of other things, the bearish cycle started about February of 25. XRP just happened to come back above. Oh, Garrus, you're still here. Okay. He was saying that to the hype viewers. Oh, I got you. Sorry, I was still picking my balls off the floor from when they crushed them. Uh, just kidding. I'm in a delicate mood, a great mood actually. Yeah, I see what you're saying. I see what you're saying, Garrus. Yeah, I put in some time for this because I don't know. It gives you guys kind of a look into what we do in classes, but also we go so much deeper in classes. But I'm trying to use my skills I've attained from teaching to try to teach everybody certain segments of this. And I really do think it's very important to know all this. Bam. Enough of that. The hype viewers will come back, when the market's their kind of type, if you know what I mean. And then we'll try to give them knowledge. And we don't want them to be hype viewers. Everybody starts off as a hype viewer, but we want to turn them into very knowledgeable viewers the way that they can make real decisions. So the second point to this would be institutional liquidity sweeps. We have a stop loss cascade. We go for liquidity hunting. We break look overage, which we tried to break out. And then what do we look for? This is what we look at for the stop hunt wick. Watch this. Just watch this. It doesn't lie. It's universal. This is pretty interesting how this happens. What did we do in a weekly time frame? You see that? Is that not a stop loss? Is that not a stop wick hunting right there in that weekly candle before we close below? Does anybody see that? Look at that and look what we drew out, what we're trying to do for the stop hunt wick. Look familiar? Kind of looks familiar to me. Very familiar. So we definitely went for some stop wick hunting. So large institutional players view 200 weekly moving average as value zone, triggers retail, algo stop, cascades, providing sell side liquidity for large buy orders at discounts. And anybody in the class, we'll go deeper into this at a later time as well. We've got macro trend exhaustion, 4-year growth cycle invalidated, collapses, accumulation phase, and that's what we want. We want this accumulation phase, and we're so close. We're so close, but yet so damn far. A weekly close below invalidates previous multi-year growth cycle. So anybody who still thought we were in a growth cycle, this weekly close below finally invalidates that entire growth cycle. Until now, technically you could have said the price action is still technically above it. And, we tried to come back above it one other time as well. It never happened so far. Market enters months-long accumulation phase seeking a fundamental bottom, and I can't wait till we get to a fundamental bottom. I'm telling you right now, this will be my favorite time out of all 3 of our bottoms we bought. We bought the bottom in 21, the bottom in 23. Together, we sold the top in 21 and the top in 25. This will be my favorite one because we've got a much bigger audience, and this is going to change lives when we do it this time. And it's already started to change lives, but this will be different. We're going into a very, very, very weird time in human history. Interaction with key technical gaps. We have the fair value gap over the top, which we know for XRP, we still have a gap sitting up there. Price targets. We have unfilled CME gap for Bitcoin. Ironically, we still have an unfilled CME gap for Bitcoin at 81K. Isn't that kind of ironic? Price vacuums down to institutional magnets for equilibrium. And number 5, the sentiment and retail trap. Single week close. So we have a single week. Now, is this a fake out? The weekly moving average is widely watched. False break traps, breakout sellers feeling short squeeze. Watch for multiple weeks or failed retest for confirmation. So this is what we're watching for. This is what we're watching for to see if, in fact, we can come back up now, or if this is the start of the very push to the bottom, because we very well could have a couple weeks where we still push up. I know Garrus knows. I know a lot of you in here know that that's possible still. So we're looking for a clean break and hold, confirm long-term bear market, look for lower liquidity pools. And we've identified a few under $1, which is phenomenal. That 91-cent one is what stands out to me the most. The wick below, institutional stop pump potential for sharp V-shaped recovery. Failed retest, confirmation of 200-day weekly moving average as dominant resistance. And deep accumulation, price hovering below weekly moving average, transition from weak hands to strong hands. That's what we're looking for. This is what we're looking for. So we've got a clear close below the 200-day weekly moving average now. And this is a big deal. We actually closed below it for I don't want to say it's technically the first time, But if you look at how these weeks have started, we've had a real nice close here. We've had a few weeks where we've been under it for multi-weeks, but then we had the fake out above. Remember how we have the fake out down, V-shape, failed attempt up. Now if we start to break down, this might have some significance. So that's the importance of this one right now. Now we need to see if this builds some legs here, because we've actually had a couple weeks where we were below it, right? And then we rounded back around. Now could be the time, Garris and anybody else watching who is technically savvy or technically interested. $1.31.5 would be a great area to start watching. A great area. And the 4 hourly, as we like to call it, we've already had that weekly death cross, and we could be building a fractal in the shorter time frame, and now it's building into the longer time frames. We had a weekly or a 4 hour reversal on that last candle. Hunted a lot of liquidity. But let me see it. We had a super chat, a crypto cruder. Thank you for the $5 super chat, and also being in Tom's Army for over 1 year with the I Told You So Bad. It says thanks for your daily dedication and trade secrets. I try my best, and I'm trying to divulge them through anybody who's wanting to watch when I go into the Zoom, even in the lives. Now I acknowledge it's not as deep as I would go in a class, but it gives you a certain idea, just the cusp of what you could learn in a class. Like, oh man, do we go deep in the classes? And if you're interested in that, there's a link in the video description below in their pinned comments to join their 3 days a week, 12 to 1 p.m., Monday, Wednesday, Thursday. Thursdays are technical days, which I freaking love, and I know the class does. We have 46 students. Upon signing up, there's a workbook, a digital workbook that has over 960 pages going back to class 1. There's an archive, so you don't have to watch it live, and there's 31 classes right now. So you get about 35 hours of learning right off the bat. It's insane. And it's indefinite. But we can see we have the death cross. Even the 50 has crossed the 200-day now, which is the ultimate confirmation. And we've also got a rejection here and an engulfing candle to the downside, bouncing below not only the 200 and the 4 hourly, but even that 50-day moving average we're below after the death cross from the 50-day. The 20-day had already crossed. We're even below the 20-day moving average as well. So this could get spicy very quickly. Now I would like to see if it passes that $1.36.8 or if we want to try to build some kind of inversion, but we can see a overwhelming head and shoulders there. We can also see a possible inverse head and shoulders. So we're really going to have to see how we react if it comes down even farther to $1.31.5 or if it pushes back up over these resistance points. Some will be like, well, how do we know? We don't know until we get further data, as Jerome Powell always says. And in this case, it's true. We need further data. But I can tell you in the 4 hourly, we were at 52.46 for the trend line in the RSI. We broke below it to 48.52. That's a bearish signal. We're not above 51 anymore. We could very easily come back above it, but as of right now, we're not. The stochastic is seemingly breaking down here a little bit. Now we need to see if it can have any kind of upward fortitude, any kind of testicular fortitude here to start the week. Because oftentimes I like to look for opportunity, as everybody knows. Sunday night after the candle closes, and then into Monday, I like to see if there's any kind of opportunity to develop. My eye is still looking at XDC because it seemingly was ahead of these moves. But we really need to see now if we get a big breakdown or not. Like, it's a big deal right now what's going on. It's a big deal. This is fine. We're finally starting to build towards something. Now, we could very quickly come right back up. It is Sunday. It could have been an overzealous sell-off by the time we get into the Asian hours tonight. Around 10 or 11 p.m. Eastern Standard Time. After we get done with this live, you can watch that, and see this. But yeah. Blue ball's bottom hunting it. I love it. Noob Saw says, and thanks for being in Tom's Army 3+ months for you and a few others and everybody in Tom's Army in here. I really appreciate it. I'm trying to go fast pace here, so I don't have time to go back to the top. But he says his program is overworked. Laugh aloud. He's making the whiteboard tired. He works so much. I know. True that. 1970 legend, our fellow Buckeye in the house. Fan of the Ohio State Buckeyes. He makes Michigan better, and Michigan makes them better. Even though we're the defending champs in basketball. I'll be damned if you guys won it in basketball the year after we did, just like in football. That'd be a modern-day miracle. No disrespect to Ohio State. And thank you for the gifted sub and being in Tom's Army for over 1 year with the I Told You So Bad. And a very trusted mod. I appreciate that. And Rio Rio gets that gifted sub for the second month with the Dust Shadows Crypto News. Everybody's saying clear as day. You've definitely been leveling up, Tom, says Richard. I appreciate that. I've definitely been trying. I've definitely been trying to make this content much, much, much deeper. Can't wait to unload in the bottom. Haha, sorry, can't help myself. Bottom is the word. Yes. You and a bunch of retail. You'd be on the same page with that 95% of retail when we get to the bottom. Like, oh my God. I believe it's called Bottom Blasting Bright Future. Mr. and Mrs. Stott, welcome in as well. Bearded Viking, we continue to pray for Marty Marcus as he continues to fight the good fight. I was thinking XDC. Thank you for the confirmation. Yeah. We got to pay attention to how this is gonna go. With as far as ZBCN, I tried to talk about ZBCN. How it was, well, because of Las Vegas initially. Now we need to see if this is a head and shoulders. So watch ZBCN and see if it passes. Let's see. See if it gets rejected here, somewhere in that range, or if it can come past. If it comes past, it's going to come up a little bit higher still. It'll come up a little higher. Now, am I a little disappointed it didn't come all the way down and back test the breakout? I am, because it leaves a little bit of, it leaves a little back test to be desired. But I'll continue to watch that later on. So, but that's neither here nor there. But yeah, ZBCN 1970 LUD's been talking a lot about it. Led everybody in a good direction there. And there was some good profit there if you took it. True, welcome in and thanks for being in Tom's only 3+ months. Just send it also 6+ months. Honey Badger, welcome back and thanks for your first month, my brother. I made good project or profit on ZBCN. I'm starting to like the project long. It's a good long-term project, no doubt about it. Especially if some of the rumors with Ripple are true. Maybe they're not so much rumors anymore. I think it's going to correct hard and I'll buy more. Hopefully, I still have some riding just to see. I don't blame you. It's still above that breakout and that back test hasn't broke down. So you're not in a bad spot right now for ZBCN. Oh yeah, I wanted to show you as well on the heat liquidation map. Since we were talking about the 200 EMA, how we close below. Now, what we're looking for is some of that liquidity that we can sweep below. Now, I know we're building some above. Look at the monthly. $1.46, $1.47, $1.48, even pushing closer to $1.49. We've also got some liquidity building at $1.31. And then if we look at it from the 2-week, we can see it in a slightly different fashion, but we can continue to see this liquidity that's up over the top. 147, 148, which is very interesting to me. The 1 week, we've got it right above where we're at, so we tapped into a little bit of it before, but not all of it. And then we've got some down at $1.34. The 3-day, which is 72 hours here, we've got it starting to light up here below us and above us. So they can definitely take either side of the liquidity pool. So it's tricky right now. Where it's at in the weekly, it's tricky. And now, does this become breakaway liquidity, or does this become liquidity will come tap later? Or is this going to be liquidity that's going to stick around? You know, these are things that I want to see going forward. For the heat liquid, for the 24-hour long versus short ratio, and these are things you all can do. These are free. Right now we have 30.59. Let me refresh this just in case. I want to make sure it's not from earlier. 30.59 million going short, 8.31 million going long. So, you know, that's why I always say on Sunday nights I try to find opportunity. This would seem to be a good recipe here for it to actually have a fake out to the top side or finish clearing that liquidity on Bitcoin at 81. Until we clear that 81 to 82K zone, I'm not convinced that it's not going to clear it, even if it's a fake out to the top side. So I'm expecting a 3,000 point move on Bitcoin at some point here. If it was from this price point, I'm expecting it. I don't just think it's going to happen. I expect it. There's just a lot of liquidity there. But that doesn't mean it has to do it before a further drop. But I expect it to sweep that level at some point. Likely before we hit the ultimate bottom. Let's just put it that way. It's not a guarantee, but it's likely. Ethereum's got 22.4 million going short and 12.81 million going long in the last 24 hours. And our friend XRP has 373,000 short, 574,000 long, which is interesting. It's a diversion from both of those. So, I mean, there's definitely some dynamics at play here For Bitcoin, we'll go from the 3-day and work our way out. A lot of liquidity below and a little bit above. 80,900 is a big one. And that's the big liquidity sweep area that I really would like to take out. I know there's a gap up near that area too for Bitcoin, a CME around 81, 81.5 area. That could be a breakaway gap if we fail to get back there, which can just be a further confirmation that this market's bearish right now, and we'll take it out later. Man, 77's got a lot building up here, and this is just in the last 72 hours. Jesus Lord. Even at 75. What about the monthly? Okay. We're building a lot of liquidity below us. Yeah, we've got all the way up to 81 where it looks like we got sustained liquidity, but look once we get above there, not much in the monthly, but look below us. Oh my God. You got billions and billions and billions of dollars working our way down. Oh boy. Even at 70K, you got a bunch of liquidity. 69, 7, 60. Oh boy. It's starting to look like that Ethereum map. Remember Ethereum before it had that big drop down to 2200 range? 6 month, you're not going to see as much because a lot of it's already out either way. 3 month might give us some fireworks. Lord have mercy. So the question is, do we come up through this area first? That's the big question. Are we going to come up and take out that liquidity first? We're definitely going to come down here at some point. Look at that liquidity extending down. Damn. That's a lot. We got a lot of liquidity here on the heat map. There's a lot of liquidity down there. Garrus, let's take a look at Algo. I think it's on here. Is Algo on? Oh, maybe it's not. No, I forgot they don't have Algo on here. What a friggin' joke. Then again, they don't even have XDC on here, so I guess how big of a joke is it really? Ethereum. Ethereum took out those billions and billions of dollars here. I remember when we were talking about this. It was massive billions of dollars. And we were up at 24 and 2,500, and it's like we're not coming down there to take it. What's a 6 month look like on Ethereum if it'll do it? It's not horrible. About the 3 month. And this is information people should want to see. I wouldn't be leaving looking at this liquidity. This helps you get in tune with the algorithm. Okay, we got some liquidity we can tap. And then let's take a look at the crypto fear and greed index now that it reset. 40 again. What? I think that's too high. I think it's getting up there a little too high. People are getting a little too comfortable in this market. If I'm being honest, looks like people are getting a little too comfortable in this market. I wouldn't be so comfortable. Interesting. Let's see. And Bitcoin, we know, is outside of a rising channel. It broke down out of it. But we could still have that back test over the top, which, you know, it couldn't get past this liquidity box. That was a nice liquidity sweep box that we put out there. Tapped it. Hasn't been able to come above it. And if it was me, if this is building an inverse setup, I would say probably 76.9, 76.5 area. So, you know, there's definitely that possibility. 4 hourly and the stochastic is pushing down hard. 4 hourly and the RSI pushed below the trend line. And it's got a little bit of sustained room here. So this could get ugly in a minute. Garrus marked his, he has his heat liquidation map. And I'll go to it. It's in the Telegram. Which all of you are entitled to if you join Tom's Army. If you're in the Telegram, please renew to Tom's Army before I have to purge. I don't want to purge anybody. Don't take my kindness as weakness, because my weakness will grab you by the nuts and squeeze, and I'll put you back in the proper alignment when I have to. But that rising channel, 81,555, that area, even at 81, I mean, that's a big area. If we ever come back up there, let's take a look at what our good friend said. Let's take a look what our friend said. Garrus. Whoops. Garrus. I did like the memes earlier. Wait a minute. Your heat liquidation. Is it, which one? This all-time chart speaks volume to me. I'm probably wrong. Which one is it, Garrus? Let's see. At 8 p.m. I'll adjust the prices. Is this the one? Are you talking about this chart, Garrus? Because I do the same thing on mine. I mark the areas of content. Oh, the one that speaks volumes. Okay. The one that speaks volumes. I mean, look at Algo. It looks like it has a huge inverse head and shoulders on it too. I'm intrigued by Algo. It even back tested perfectly with a double bottom. The all-time. So you're talking about for Algo, it's this one? And that's definitely, I like how you set that up. I definitely like how you set it up. Let me get my big head out of the way. I mean, the great thing about this is, like, if I bounce it off of how my chart looks for Algo, I like the way you have it set up, if I'm being frank with you. Even though, you know, we got to be careful right now, but I like these levels going up. Like, once we get past here, I mean, if I start remarking this chart back up, you'd see it marked at 1460. Then you have another one here, more here, one here, one here. So I like how you have it marked out. I really do. Because this has been in such a sustained downtrend. But that's a huge inverse pattern. It's massive. Now, the one thing I've been thinking about myself is, now that we're getting this printed data, is it possible that it's elongated like this and it's stuck within a wider pattern? You know, that's something I've been thinking about myself, especially where we're at. So I like the way you set that up. Oh, 8 cents is the all-time bottom. Like all time that you think it can go to, if it, or the bottom that it's ever been. Because I know it went down to the 827, but if it, I've been looking at it this way. If it wants it a third time, we could get like a 007 and some change. I mean, it's not that far off from what you're saying, so we can split hairs there a little bit. But I'm looking at, even if I wanted to play that all-time pattern for a third tap down, I could see it. At any point, once this breaks out, it's going to be a big gainer. And there's a big inverse head and shoulders. This could very well be a flag setting up here. I'm very interested with this particular asset, as you guys know. I'm a big fan of Algo. It's made me hella money over the years. And I think it's going to be one of the big players going forward. Once it makes that initial thrust out, I really do. So, Garrus, we're in this very similar area. Very similar area for this all-time setup. Like, very similar area. Let me get rid of some of this so it's not so messy. But we're in a very, very similar understanding of this pattern, of this chart. And obviously, all charts are different. Like, we could be on different exchanges and things like that. But we have a very similar logic. I mean, you're talking about within 6 or 7%. That's pretty damn good when you look at an all-time pattern. But that inverse head and shoulder speaks volume. It's big. It's a big pattern. Now, it does make me a bit nervous, though, if you extend this out, that maybe this is a descending triangle here. We'll see. I don't know. It's still... Oh, man. It's such a tough one. Because of the way the market... It's such an interesting one. It's definitely it is MQ, and welcome in, buddy. Thank you to you and Garrus and everybody else who is one of my mods, Silver Days and 1970 Legend and the Cannabis Podcast. I appreciate you guys, and also all of you being in Tom's Army, trying to control this place in a good way, in a positive way. Um, he just shut his door. Were you sitting in there? Oh, okay. How's he seem? Just chilling? Okay, I got about 10 minutes, okay? You might not. I tend to agree with you, especially because he's getting that antibiotic. Yeah. But
His button's not feeling tight up against his fingers, so it's not.
oh, good. So it's not too bloated right now.
Or it's not that he's, like, because it sucks in when he's hungry.
Yeah, so it's not like that. No, I didn't notice that either. Good, good. So with XDC right now, notice how it's at 290. Let's talk about a few other things while we have each other's time. I've been looking at XDC for my next potential play. Look where it's at in the daily. It's significantly oversold in the stochastic. Significantly in the daily. It seemingly looks like it's starting to play out this pattern a little bit. It's a very dicey one to try. Here, I'm going to get rid of some of this. It's a dicey one to put together, though, because you could look at this in a couple ways. But once I started to look at it almost like an overrun, because, man, I've looked at this so many different ways in the short term. But I'm trying to get this consolidation after it bounced outside of that first descending one. I'm really trying to build a narrative here, a proper narrative. And XDC is a tough one, too. They're all tough ones. They're all in tough spots. Because I still think XDC, if it's coming down to bottom, it would be around that 225. And my question is, and just don't shoot the messenger, did it put in a double top here is my question. That continues to be my question. Is that almost like a double top formation? And if it were to pull down and do this, I think we could see how it pushed out. No, here, there was really no volume, a consolidated break. Oh, man, I would love to see that happen. Like, I would love to see that happen because I know, respectively, we're trying to come towards a bottoming phase. I can feel it in my nuts. So I can feel it in my gut. I can feel it in my gut that we're trying to come to a bottoming phase. Although, as MQ will tell you what we've been discussing for months, for many months, that it seems like they're going to time it with the midterms in the USA, which means we probably won't see the true bottom until like August. Like by the time you see the pumpkins out in October, you should be able to start seeing a reversal. I have a channel and there's a lot. Oh yeah, I have a channel that I had set up too, but I took it out just to try to show this part. But I had it in a channel initially, which I still believe in the channel. It's not that I don't believe in it. I just wanted to see that the alternative setup. But I was almost under the belief that it was doing something like this, Garrus. After it came out of that descending wedge. But the problem is when it came out of that descending wedge, I mean, you want to look at the volume. And this is almost like it didn't do anything. It just ran its course and then nothing happened. To me, this makes it look more bearish. And then it could maybe come down even to the lower levels. I put this little blue box out here on the other chart, if it ever loads up. Oh shit, I probably shouldn't have said that I was going to be going soon, because that means people leave. 15 people left right when I said that. Whoops. But I was just telling Julie. Jeez, those Louisos. But I've looked at this. I call it a fair value gap, but I don't like to put the name of it. It's just, there's a gap here that is, I mean, you could come all the way from here and be like, hey, Tom, nothing's happened. Since it broke up from here into here, nothing's happened. You know, like, we've never come back there. And I mean, how can we argue it? I'm going to get rid of this, though, because I don't want people to be like, hey, this is one thing, and then, damn it, this is what I think it is. This is just how I tell myself. We've never come back down there. And, I mean, we could shorten this a little bit from about here to here. Where's it at? I mean, we've never come back down into this area. We've never acknowledged this spot. Ever. Once we broke out. It's kind of crazy, if you ask me, that we've never acknowledged that area. So, We just got to wait and see. That's the bottom line. We got to wait and see here. Oh, yeah, there's a lot at 0.25. If you guys remember my area, it was Call of Elderbrand, thanks for the $5 super chat. Says, appreciate you coming on and deciphering this shift. I'm trying. I tried to stay ahead of it before the shift so nobody would get caught off guard. I know it's not just me though. MQ in the Telegram, Garrus, Nick. Hell, a lot of people are trying to help out with all of this. A lot of people. I like what James does, but I think sometimes he misunderstands that I do a lot more than charts, and he thinks that I don't cover all the other stuff. No, I have a basic focus on the charts, but I understand all the nuts and bolts better than most. The news, the workings, the inner workings. I may not always speak of it, but it's a big part of my understanding. This whole community is great. I'm not saying James misrepresents it. I just think he misunderstands my knowledge. He sees me as a technical guy, but he doesn't see me as the other side, which that's common. That's where I get misrepresented a lot. Hey, he knows the charts, but you know that's kind of his lane, and I'm in my own lane. Well, technically our lanes cross over. I just have a wider lane because I understand the technicals. If you catch my drift. And I love reading James stuff. Like, that's why I created his own section. James is one of those people that if you read his knowledge and you keep an open mind, oh man. Because if you put it all together, it really makes a lot of sense. But you gotta bring it all together, and that's why he's so valuable. We've got a lot of technical guys, but we need a guy who's not so much focused on the technicals, understands them enough. But we need somebody who puts a lot of attention into the other stuff, the nuts and bolts of it. You know, it's like sometimes you have an auto mechanic and they know about a lot of the stuff, but they don't know about a lot of maybe the codes. Well, man, that's a bad assumption. Maybe they don't know where to get all the parts, or they don't know who's building the. How about that? They don't know the inner workings of the actual, the bolts and you know, like where the parts are being made and all that good stuff. Call of Elderbrand, yeah. If we come through that, I mean, for XRP, that $1.38 zone. What'd you say, Julie? Oh, I thought you said something. I'm sorry. $1.38 zone. I mean, for me, the big thing right now is seeing if we can't reclaim that $1.42. And right now, that looks like a nice weekly reversal for XRP. If it holds, I still understand, though, that we could come all the way back up here, as I know a lot of the technical guys do. That is not out of the question to push back up to this 20 EMA at about $1.58 to get an ultimate rejection. It is not out of the question. Now, we've been laboring here for a while, so if we take it out into the 4-hour time, or take it down to the 4-hour time frame, they can find your engine, but don't play with the body. There you go. There you go. That's a great way to put it. They can fix the engine, they can rotate the tires and do all that, but they might need to look for a body shop to, you know, do the outer work. I like that. That's a better way to put it. Thank you. Who said that? Mr. Stott, I appreciate that. MQ above said we had a fundamental analyst for years. Milky was a professional running a company doing these sorts of evaluations. It was literally his job. When I look at his last portfolio allocation he shared in January 25, just having a glance at it since then, veracity, he was a big supporter, went to zero, Woo down 96%, solicited 10. Absolutely. But yeah, and think about it. And most of these people, here's the deal. A lot of people, and MQ, I love that you said all of that. A lot of these people, and I know you're not shitting on the man, but most of these people, even if they have technical understanding, they can't get out of their own way. Being a good technical analyst and also being a good portfolio manager are two completely different things. It's a completely different thing. And I like how you're saying, I'm not shitting on the man. He was a professional through and through. Point I want to make is his low cap altcoin space and arguable the entire altcoin space. Hello Luna is more or less exactly. That's why you have to play cycles. That's why every single person who says you just long hold is they already failed. Even if they're good at the chart, if they're good at the charts, they would understand. This is just me being real. If you understand the charts and you understand we're in risk assets and these are low cap tokens, most of them, there's no reason to ever hold on after a bull market ends. Zero. It's just it's not plot. The same reason I don't hold on to a commodity outside of the actual precious metal, which I'll never sell. The reason I don't hold on to a mining stock after a bull, I don't care how good it is. I don't want to sit through that come down. And sometimes the come down is so great, you never get back up to the ultimate spike. Then you become a forever holder. Because think about it, when you've seen the digital stuff on the screen and you turn a couple $1,000s into, let's say, 100,000, and then it's back down to a couple thousand or less, even if it goes up to 20,000, these people are going to say, hey, I'm 80% down still. I've seen it over and over and over again. I'll never be that person. I should say I'll never be that person again because I've been there. And it doesn't matter how good you are. You can't force it to do what you want it to do. You just got to understand when you're in a bear market and you buy the bottoms, and you'll know, we give certain P's and Q's, then you can hold it until the bull market ends. Now, when that bull market says it's over, do you know how many people in 21 bought XRP sub 50, sub 75, sub $1, and they weren't willing to buy it or sell it at $1.98 because it never went back to all-time highs, not realizing they weren't getting that chance in that cycle? So they went back and sat through for another 2.5 years, 3 years, when they could have just sold it at $1.98, took the profit, understood the bull market ended, and then based on analysis, I could say any dummy could have seen, but it's not true. Only the best of the best could see that actual setup taking place and understanding that sub 40-cent buy was where it was at. And pinpointing it at 34 cents was not a small miracle. We actually had years of data backing it up. Just like now, that descending triangle, the cup and handle, which is a handle on the cup, which is the descending triangle, it's not a small miracle if it plays back down in there. It's actually what it's telling us. So, I understand MQ, and I know exactly where I do it. I got the ball. I got big balls, just not at the wrong time. I'm not going to put my balls out there just to be run over by a freaking semi-truck. If you know what I mean. So I need hard proof that we're bottoming. And I know where my hard proof's going to be. And I know what metrics have to be met. They're not even close to being met. Not even close. Or I need that hard reversal like you're talking about. And that's not even close to happening right now. One, we have no freaking volume. I mean, look at the volume. We haven't had volume since... I mean, even this puny volume we had in February, that's not volume. That's all sell volume. I could argue even in this past bull market, we could all see that it was a falaki. It was a fugazi. Because look at the difference in the volume in 21. Even look back in the day, 18, 19. I mean, look at this breakout. This volume right here didn't even equal some of those earlier days. So, oh man. Oh, I agree, MQ. I'm always going to keep it real just like you are. I'm trying to save everybody's ass. I'm just trying to save everybody's ass. Because if we don't do it, MQ, who's going to do it? And is that not a huge double top? I'm topping reversal. And we all know I'm topping reversals come back down to where they started. And I'm sorry, but even this breakdown wick, this might have been the golden ticket here on this chart. That might have been the golden ticket. That might have been the one chart that overzealously broke down, but was actually telling us the range, the proper range, where we could start to open our eyes. As crazy as that sounds. Just, man, oh man. But the more people that I have on my side who actually realize what's going on, like MQ and Garrus and Nick and so many others, Crypto Cooter. Now Bearded Vikings getting much better at this, Silver Days. Even Honey Badger now. Honey Badger, his voice is becoming a lot louder here in the past few weeks, and I love it. Garbanzo knows what's going on. You know, there's a lot J for Mix, and there's a lot of people in here this evening that actually get it. They get it. Call of Eldebrand is starting to get it to a deeper level. I know Crypto Cooter is definitely getting it. Canvas Podcast knows what's going on. You know, we got a lot of people who get it. 1970 Legend definitely gets it. Rio, it's been nice getting to know him as well. But yeah, Bright Future Freedom and Crypto Plumber welcoming it. They're getting it. Richard's getting it. Noob Sauce gets it. James Dula definitely gets it, but he gets it too on the inner workings of things. I think his addition in the Telegram was very valuable. Very valuable. Remember what we talked about at the beginning? About that break up? That's what I was talking about. But now you can see a very clear gap left on VeChain. But this is what I was talking about. Look at those gaps that are left now because we have these hunts. Remember we had those big shorts? A lot of people were going short on the chart. The long versus short ratio. We could see it. So it made perfect sense to make a push up and fill some of those upper liquidity gap zones. That's why I said I'm very, very interested if maybe XDC is my play for the evening. Because I'm always waiting for that Sunday into Monday flip. I'm glad it happened while I was on. Because we went through all of that. We went through all of that. We went through the liquidity heat map and talked about why it was more than likely going to go up, even if it's a fake out, because so many people were going, there's just so many areas. I'm very interested in XDC right now. I'm not going to lie. Very interested. And it's not because of the 3 hourly or the 4 hour. It's the daily, man. That daily stochastic is telling me the last time XDC was down this low, it's been a while. It's been a while. I mean, we haven't been this low since the beginning of the year. Honestly, we're tapping the beginning of the year low in the stochastic right now. So, I'm very interested. But I'm XRP Future Millionaire. I got to get going, everybody. It's been great. I'm going to do the outro, but a different outro this evening. How about that? Ladies and gentlemen, I know what time it is. Do you know what time it is? Ladies and gentlemen, the sunny days are here again. Oh, sunny days. Oh, what a day. Oh, sunny days. Oh, what a day. I wear glasses 'cause I can't see a motherfucking thing. Happy days. Oh, happy days. Oh, what a day. Oh, happy days. Oh, what a day. XRP will reign supreme. Let's just not get caught in the FUD. Oh, we're gonna crash and we did and we will and we won't and we can and we will and we won't and we did but we didn't but he said we can't and we will and we won't and we did and we will and he ain't and well, oh yeah. Stay true, stay blessed. Bitcoin's the biggest Ponzi of them all. I think we'll all see it by 2032. I can't wait for that date. Well, not 2052, 2032. But I definitely wanted to sing Sunny Days. I miss singing Sunny Days. He's not Pinocchio. I think he was trying to have a cigar or something, but he kind of looks like Pinocchio. You telling the lies, Sunny Days, Mr. Sun? So much to be said for that. Get the fundamental grip on volume, RSI oscillators, and moving averages nailed and gonna be unstoppable. Absolutely, MQ. Absolutely. Have a great night, everybody. Be blessed, and I can't wait to see you guys tomorrow. I really can't. Consider leveling up and joining the classes. It's a game changer. got 31 classes and yada, 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 so on and so forth. You got the digital workbook at your disposal. There's bait Unix for the non-tier 1 exchange. No KYC if you want to leverage trade. Just pay your taxes. And then if you sign up for the classes, there's the playlist. You get immediately 31 different classes archived. You don't have to watch it live. They're all put in one place. You get a digital workbook upon signing up. It's got 950 something pages or 60 pages. Yup, it's got 950 something pages or 60 pages. So it's all set up for you, and it's everything we've taught from the class, and it's just it's a game changer.